So you're thinking about actually getting a loan. So what is it that the banks are going to be looking for in terms of being able to lend you money for a mortgage? Well, there's actually 5 C's that allow them to do that they look at. Character, capacity, conditions, collateral, and common sense. So let's explore all 5. The first one is character. Now, when they're talking about character, they're looking at 2 things. Character of how long have you been in the current home that you're living in, and how long have you been in your current working environment for. The banks are saying this is a 30-year loan. If you've been moving from home to home and all in the last, let's say you've moved 6 times in the last 5 years, they're thinking, well, really, are they going to settle down and stay in a home for that long? And in terms of income, they're saying, how long have you been employed for? So what is your character around your level of employment? How quickly do you move jobs? Are you going to be able to sustain that job for a long period of time, allowing you enough time to pay off that mortgage? Number 2 is capacity. So let's talk about capacity. Capacity is all about the income that you're generating, and that's all around servicing the loan. So a lender will use a calculation around your ability to make those repayments, and that same calculation will also talk about the borrowing capacity that you're able to achieve. So the things are you employed full-time? Are you self-employed? Does that income fluctuate up and down? Are you casual? Are you under a probation period? They're all the things that they're looking for when it comes to capacity. Now, conditions. There are lots of lenders out there, and lots of lenders have different types of conditions, and that's their risk tolerance around what sort of comfort they have in lending people money. So conditions might be that if you've only been employed for 6 months or less, or you're casual or part-time, they may not accept your income. The other thing they may also be looking at is, how's your credit been? Do you have a bad credit history? Do you have a positive credit history? Are you able to pay off your loans on a regular basis? Have you been able to demonstrate that? Have you also been able to demonstrate a capacity to save money over time? They're the types of conditions that lenders are looking for. Then we move on to the collateral. Now, the collateral is an interesting one. That's the security. So what is the bank lending you money against? What type of security? Now, obviously, there's different types of properties. We have residential zone 1, houses and units, but we have different types of titles. We have strata, we have stratum, we have company title, and we have obviously private treaty or freehold titles as well. So they're important things to understand. Torrens titles is another one, as an example. They're the types of things. So the bank is saying, am I happy to lend against that type of collateral? Finally, common sense. Now, the common sense approach is about putting all of the conversation together and saying, is this a reasonable risk for us to lend the money to this client? Let me give you an example. If you're a recent arrival and you've had 10 years experience in the IT industry from the country that you used to live in, and you're living in Australia and you've just secured your first job in IBM or something along those lines, and you've got good income, but you haven't had that long-term employment in the Australian market, they will look back and say, well, there's good common sense here that this is a professional person and we want to lend them the money because we want to build a relationship with them. So they're the 5 C's of lending, and they're the things that the banks are looking at to consider you and to consider lending you some money.